what's good, everybody? Happy Tuesday after the close here. Welcome to the Closing Beat. This is our stock market update show where we go through all of the things that happened in the market today, and there was a lot going on in the markets today. And in the meantime, while we're talking, you can see all the crazy graphics there to help you along the way. We've actually got quite a bit to talk about. If you're one of our customers tonight, Wine and Wealth, the discussion topic will be on the student loan formula. Look, I mean, this makes perfect sense. There's a formula, or there's a way to figure out how much you can afford to buy a house. You know how much you can take out in a car loan if you want to get a car loan, if that's your thing, and you know how much in a payment you want. But when it comes to student loans, nobody says, hey, do it just like this, right? This is how you should do it, or at least a starting point. So if you're one of our customers tonight, we call it Wine and Wealth. I'll give you a little hint. I got a head start here. Sangria will be the wine of the night tonight, or at least the drink of choice. And I've got a secret formula for you to share with you, how to make your best sangria ever. So if you're one of our customers, the email's already in your inbox. It starts at 8 o'clock tonight. Of course, it's recorded. If you can't make it, just hit that link anytime you like, and we'll get started from there. Also, if you're one of our customers, you haven't got the towel yet. Some of you actually got the towel sent back to me. So if you want the towel, basically it just says the markets recover 100% of all declines 100% of the time. So you have nothing to be afraid of. If you're invested correctly, which we help you with here at Jazz, you've got nothing to be afraid of. If you want that towel, let me know if you haven't got one already. I'd be happy to send one out to you. So that's that. Friday, there'll be no closing beat, and I'll be honest with you, I don't think there's going to be a closing beat on Thursday either. I'm trying to beat some storms. I got to go to North Carolina, and there's some storms up there, or pending storms, so I'm going to try to maybe leave Thursday. If that's the case, there'll be no closing beat on Thursday. Sorry, right? We'll be back. We'll get you taken care of. Don't worry about that. Hey, let's get started here because there's a lot going on. I'm going to hop over to the charts if you want to play along with me. So here's the Dow on the screen here. Great day for the Dow. You had a lot of good things going on here. Let me go over there and just let's go through some of these things because in the Dow, for the day, it added almost 200 points. 197 was the official finish for the Dow. Great day. A lot of it, United Technologies and ExxonMobil. So United Technologies on the charts there. Great day for earnings. They reported earnings, did much better than expected. Raised guidance going forward. They're doing really well. So United Technologies, a much deserved 3.75% gain today. I'll say also Verizon reported earnings. They did well too. The stock's pushing up to those most recent highs. So in the Dow, that's what helps out today, pushing that higher. Nike was your underperformer. Stock lost basically 1.5%, and McDonald's lost 0.5%, which is not really a big deal considering they have earnings coming up. Consider that a lot of positioning going into earnings. So that's that. If we look at the S&P 500, that added 13. Why didn't the S&P 500 compete as well as the Dow? So we talk about that. How you want the you want to see about 1/10, right, if you're paying attention. The Dow's up 200, the S&P should be up around 20 or something. But you can even see on the charts today, it pushed higher and started to pull back a little bit. There was a lot holding it back today. We'll get to some of the names here. But I want you to think in terms of retail, some tech, and transports. Okay, transports took a little break today. A couple names, Alaska Airlines, they're not doing very well at all. That pulled back almost to new lows. J.B. Hunt, that's a transportation company, a trucking company. They pulled back as well. So a couple names there, and of course we'll go over retail in just a second. And that's really what held your S&P back today. Now, the Nasdaq 100, your dominant leader here, aside from the Russell, your dominant leader closed down 1 point. So it actually started the day shooting higher. You had Alphabet earnings. You had a lot of great things going on. And then all of a sudden it starts selling off, profit taking, right? There's an old strategy, if you're a day trader, which revolves around playing a counter trend. It could be a swing trader as well, where when a stock's had a decent move up and then it starts higher or pushes higher in the morning, that's when you actually look to bet on going down or play for the short. And I think that's what you saw today in the Nasdaq, considering some of the earnings that are coming up. People just want to reduce that risk ahead of time while they've got a nice profit. So I don't have much bad to say about the Nasdaq. I'll tell you where I'm a little concerned. If you follow the Russell 2000, if you're brand new and you don't know what the Russell 2000 is, these are 2,000 of the largest companies, not largest, 2,000 of the companies here only with business in the United States. They are typically known as the first to respond to economic conditions. And so I'm going to give it a little bit of a break because it has had an amazing run up, but almost nobody's talking about the fact that the Russell, meanwhile the market's moving higher, the Russell sold off. Is that a hint? Is that something that could be coming up here? We'll see. What is definitely coming up, and I can promise you is coming up, more earnings. This is the busiest week of earnings. I could probably do 20 minutes just on all the companies that reported earnings. Here's what you want to know. Wall Street expects almost 21% earnings growth. So far, so good. We have had 22% of the names in the S&P 500 have reported earnings, and almost all of them have beat expectations, and that includes AT&T after the close today and Texas Instruments also. AT&T crushed it. Did a good job there for the slow mover. AT&T up 2% before earnings. I haven't checked it after hours here, but the stock did well on earnings. And Texas Instruments, your semiconductor, what does that tell you? You get a little alert there. Let me see, can I go over here? Will this mess everything up? Texas Instruments higher just by a little bit on earnings actually, but that's a semiconductor stock. What do we need to make the stock market go higher? Banks and that one, right? So we need tech stocks as well, the semiconductors really to help lead the way. So looking pretty good there. Earnings are going to continue to come out. We'll go over some of them in a minute, but let's go over to what's moving the markets here, because this is a rare one. If you look at the scrolling screen, whatever that thing is called up top there, you're going to see Europe, you're going to see China, you're going to see Germany up on the screen there. They did really well, and the emerging markets, those that aren't included in that, they did well today for a number of different reasons. You got earnings coming out also in Europe. So here, the US stock market, we're releasing our earnings. Everything's pretty good so far. Europe is also doing the same, actually pretty good over there. So between that and, most importantly, China saying that they're going to use fiscal policy to support their market rather than those games that they play over there, or at least they say they're going to use fiscal policy to support their markets. That really helped out China and the like around there. So a lot of the European names and the Asian names, the markets over there, did really well, and you're seeing it kind of go across the screen. A lot of them better than 1%. So if you're in emerging markets, that continues to recover. It's been on this slow decline. We talked about a bottom forming in there a couple weeks ago. It's not the most amazing bottom, I'll give you that, but it's looking pretty good. Mexico. Notice how we're not talking about Mexico anymore? All the tariff news is focused on China. That's given Mexico a chance to recover. This is one of the emerging market stocks. It is also definitely helped by China, their comments about supporting their markets, of course. And so if you look at Mexico, this is the EWW. Is that on your screen? The EWW added about 1% today, so really good. It's since making that low back in June here, I believe we're pushing about a 10% gain. Oh no, almost 20%, so 17% at the moment, doing really well. What didn't do well today was retail stocks. So a lot of this is going to have to do with Whirlpool, all right? And so the question was, are the retail stocks going to be hurt by some of these tariffs? The steel and aluminum tariffs is one of the original tariffs. I believe solar power tariffs were the first to come out. Then we got the steel and aluminum. Well, Whirlpool came out and they're like, hey man, we have steel and aluminum in our equipment, and that's hurting us. We're having to pay more for those raw supplies. And well, the stock was down 15% basically on the day, broke to new lows in the process. That's not helping. Add to that, Hasbro. We reported yesterday they had earnings. Hey, everything was really good. Almost did a 180 today. The stock gave back 4.5% of all the gains that it had yesterday, or 4.5% of the gains. Foot Locker, another loser today. Under Armour, some of these direct, mall-based retailers, or sort of the more popular retailers, not doing too well. Some of the names that were doing well, Advanced Auto Parts, they started a reversal today. The other Under Armour, I already pointed that out. And you get the idea. So as you go through some of the weak ones today, Coty, C-O-T-Y, getting close to new lows there. That's a retailer. Ulta Salons was hinting at a breakout, didn't quite get there. Fastenal reversing some of its gains. I could go on and on, right? There's a lot of names here that you're starting to see these changes. O'Reilly, we just mentioned that the other day. It was going really well, and these retail stocks found some profit taking ahead of earnings. Now, a lot of them are reporting earnings, so it could be positioning going into earnings, people that don't think it's going to be very well, or people that go, hey, listen, I got a nice profit leading up to an unknown event. I don't know what they're going to say. And so maybe people go, I'll take some profit. I'll take some money off the table in case this thing drops like a rock. Very, very common. There's not really much else to say about that. REITs were lower. Apparently in California, their housing market's not doing very well at all, record lows. So concerns about that going forward. The big talk, we kind of covered this in our closing beat yesterday, Alphabet. So that's the parent company of Google. Google basically killed it. Earnings were great. They were expecting earnings per share of $9.59. And normally what happens is when a company reports earnings, and if you're expecting them to have $1 per share gain, if they beat, it's like, oh, it's $1.04, right? So analysts maybe expect $1, and then the company comes out with $1.04, and it's perceived as being a little bit better than what analysts expect. If the smartest guys on Wall Street think it should be $1, keep in mind, they talk with the company. I don't know if you guys know this, but analysts actually go have meetings with public companies. They sit in a room, they get to ask all the questions they want, so they get a real good feel of what earnings are going to be way before everybody else. They then come back to their firms, they issue upgrades, downgrades, price targets, whatever, and basically for Alphabet here, after all that research, they said $9.59 per share is what they expected. Alphabet came back and said $11.75 per share. That is an astronomical beat to the upside, and so obviously the shares deservedly were moving higher today by about 4%. Self-driving cars, YouTube, that's kind of ironic, huh? YouTube and cloud computing all have people bullish going into the future there, so looking really good there. Now because of that, you had the other tech names. You had Facebook up almost 2% today. They've got earnings coming out tomorrow. You had Amazon started a little bit higher. Oh, it finished higher actually on the day. 1.5%. Apple broke out a little bit higher today, broke out of that range. It's been stuck in that range for a while. If you follow candlesticks, you like what you see there on Apple. And so, but I think Netflix was still lower. Yeah, Netflix was lower by 1.5%. And I'll keep the same comments there that Netflix, nothing real happens until we go under this line. As silly as it sounds, until we go under this random line that's drawn on a chart, the stock won't do anything impressive. It's just going to sit there. If it breaks below, I would expect much lower prices. Just my opinion, not my suggestion. Okay, well, we talked about Whirlpool. So Whirlpool is struggling. Little do they're not having a good time there, all because of tariffs. And let's go over a couple other names. You're going to see in the news Eli Lilly up 5% today. They reported earnings much better than expected. Good job, Eli Lilly, if you're not familiar with them. I don't talk about this one a lot, but Biogen, really tough name to trade, man. If you're a short-term trader, I got to think there's at least 500 other stocks you could trade before this one. But they also beat on revenue and earnings really good today. Stock was higher by 4%. And then there was another name. Oh, I mentioned United Technologies. Really strong day of the day today. Earnings better than expected, revenue better than expected, guidance going forward. Everything looks really, really good for them. So that's what we have so far for that one. A couple other new things in the news you may see. Trump's looking to bail out the farmers. So the farmers are starting to complain, hey, these tariffs, man, these tariffs are going to hurt us hard. Trump is pro-farmer. He's obviously big on that. If you follow any moment on the campaign trail. So it looks like about $12 billion in essentially farmer bailouts is coming out. That's the word that's probably going to be used, is a bailout for farmers. $12 billion coming from, you guessed it, right? You're looking at them, both of us. And so what do you think that helped today? If farmers are going to get extra money or subsidies or whatever, and they have more money in their pocket, where do you think they're going to spend it? John Deere, right? Does that make sense? Look at that stock today, a little bit of a change there. So think about, always think forward. You read the headline, there's, oh, going to be a bailout for these people. What are they going to do with that money? Probably buy more equipment. So that's that. Earnings tomorrow, oh my goodness, right? Tons of earnings coming out. Boeing, Grubhub, UPS, Coca-Cola, General Motors, General Dynamics, Nasdaq, Six Flags. I put Six Flags in there because, you know, I like Six Flags, but not the stock, the thing, right? So the SEC's watching, right? Just the place. I like to go to Six Flags. I'm not telling people to buy it, okay? Let's keep it straight. What else do we have? Hey, interesting, by the way, you guys know Burberry, the high-end garbage maker, you know, with the fragrances and the $400 scarves that you wear and stuff like that. Well, they did not sell as much of their stuff as they had hoped. And what normally happens with a high-end retailer? They take their stuff and they go to outlet stores or they go sell it at a discount. Burberry, smart, they said, we're not going to do that. Here's what we're going to do. We're going to take all the extra stuff that we couldn't sell for 7 million times profit margins here, and what we're going to do is we're going to put it all in a pile, light a match, and burn it. That's exactly what they did. They said, we're going to burn $37 million worth of products so that the discount market can't have them. There is no chance that it makes it to the discount markets and gets sold for cheaper because we want people to come pay the high markups here. So they literally burned $37 million, threw it in an incinerator, lit the thing on fire. It is now gone. That is so weird. Now, I bet that's happened many times before, but it sort of made the headlines today, so kind of interesting. And also, let me go over here. Let me do this for you guys. You guys like this stuff. Bitcoin. Now, don't call me. Don't ask me if this is the bottom of Bitcoin. Bitcoin, another 6% today. Does it look like a bottom? Sort of looks like a bottom. Is it acting like a bottom? Sort of acting like a bottom. Why is it acting like a bottom? Well, here's the deal. On Bitcoin, you've got ETFs coming out. And it's been sort of speculated. I know a lot of you have asked and I've said, look, they're talking about it. They're in the works, but I don't know any dates. I don't know if anything is going to happen. Well, today it was pointed out that ETFs for Bitcoin could be coming out as soon as late August, which is just next month. We're almost there, right? So imagine the effect of the price of Bitcoin, all your cryptocurrencies, if all of a sudden retirement accounts can have that. Regular accounts, right? People that can't participate in Bitcoin or don't want to participate directly, now they've got this regulated sort of product that they can use. That could be big. So because of that, people are hurrying up and buying Bitcoin at the moment. I have no opinion on Bitcoin. I'm not pro Bitcoin. I'm not against it. I have no opinion at the moment. So please, if you ask me, if you leave a comment, if you send me an email, I'm just going to say I have no opinion. Okay, I can't comment on that one. So, man, I could do like more and more pages on this. So a lot going on here. Don't forget, if you're a customer of ours tonight, Wine and Wealth, if you've never heard of us before, there's some sort of marketing somewhere on this screen. Check us out at Jazz Wealth. Give us a shot. If you have questions, I'm happy to answer. Mark Jackson says, what can you do about your student loans? Well, you got to pay them, right? You got to make the payments, man. Regarding Burberry, Louis Vuitton's been destroying product for years. They've been better at keeping it quiet. I've seen murmurs, little rumblings here and there where you see Louis Vuitton burning something. This, I believe, was the biggest in dollar amounts that I've seen. Now, what does it mean? I mean, who cares, really? But at least Louis Vuitton's got a system down. Where you're going to be burning stuff, you got to keep it quiet because you don't want people to think, oh, it really has no value? What do you mean? I'm paying for a $1,200 purse and it's the same as the $5 purse? That's crazy. Anyways, if you want to buy that high-end stuff, my mom's got a place in New York. Hook you up, man. Good deals. You just go right down into the basement. You knock 4 times on the door. Just kidding. All right, guys, I'm going to wrap it up there. Pour another glass of sangria. I'll see you guys at 8 o'clock. We're going to go over this, right? We're just going to get this straight once and for all. Happy to help. Hope you have a great day, and thanks for watching. If I've helped you, hit the subscribe button. That helps us in some way, and I'm told to say that, so I really appreciate it. Have a great day. We'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.